In this video, I'm going to show you exactly how to start day trading from zero in 2026, if I had to start from scratch. Before I built a top 10 global prop firm and moved into a $10 million villa, I lost $250,000 trading. Real money, and I went $150,000 in bank debt trying to make trading work. By the end of this video, you have the only mindset that can survive a real account and a real strategy that you can paper trade on Monday morning. So 3 tools and setups that I use, and the 30 tools that you don't need to use is this. So I use basically a naked chart, and then I just draw my boxes and my lines on there. We also have supply zones as well, supply and demand zones where traders are going short from. We also have, if we pull out a Fibonacci, big Fibonacci retracements, 61.8 and 71.6 retracements. If we see, looking here, what do we see? We see this breaker structure to the downside, push up, bearish engulfing candle at a 61.8 retracement. Now this is actually a really good place where you could take a long from. So if we find the long.
Stop it. Get some help.
All right, so big bearish engulfing candle. This is actually a place we could enter a long. We could have our stop loss below this low, and we can target this liquidity above. If we go the opposite way, we have a good opportunity to catch a big impulsive move higher, and this would be our target. Now, this could be a trade that we could have taken today. So TradingView is the first tool that you need to trade. Second is a prop firm account or a live account. Definitely recommend FundedX. So what this means is you can get up to $200,000 in trading capital for a small fee. You just have to pass the challenge, show us that you know how to trade. Once you pass the challenge, you can take a 1-phase or a 2-phase challenge. So you have certain profit targets you need to hit, or maximum loss targets that you cannot hit. Hit the drawdown, you have to pay for a challenge again. If you don't hit the drawdown, you hit the profit target, and you can move to the funded account where the money you make on that account, you will actually get paid up to 100% of your profit split. So FundedX is a prop firm that I created in 2020. When was this? 2020. FundedX is a prop firm I created in 2023, and very quickly, within 1 year, we grew to a top 10 prop firm in the world. We've paid out over $3 million to traders worldwide. We have traders from 196 countries. So if you're looking for a prop firm to trust, and you can get up to 800K in instant funding capital as well. Once you make profit on that, you can withdraw whatever you're making on $800,000 account, which is kind of crazy. Okay, so you have TradingView, you have your prop firm account, or even your small live account. And now the last thing that you really need is a journal. For example, we have here something that says overtrading, same idea, silly high risk. Again, this happens. Journaling is so important. Journaling should be your #1 priority as a trader, because without this, you don't know what you're doing right. You don't know what you're doing wrong. And 98% of us will fail in this game. You want to be doing everything you can to be data-based and completely take the emotions out. And then if you're not journaling, you're just making the wrong mistakes. So I just gave you the 3 tools that you need to be a successful trader. Now, these are the 5 psychological breaks that every trader hits: revenge trading, ego scaling, FOMO entries, cutting winners early, and one trade away syndrome. And I've made all of these mistakes multiple times over the years. It wasn't even my trading skill set that was suffering. It was that I was just psychologically not ready to be a trader yet, and I had to fix these issues to become profitable. The first one is revenge trading. For example, people losing 40K just to get 5K back. You're going to want to jump back into the markets because now you're thinking not to make profit, not to take a good trade, to make that money back that you lost. This is how I lost an account as well. This was in 2023. Lost the trade, lost $5,000 because I had just upped my size actually. Now I'm trying to make that 5K back. So I entered a trade exactly after I hit stop loss. Now I'm down 10K, and I only had 20K in my account at the time. So this was a very silly mistake. Of course, I blew the account very quickly. Again, revenge trading happens to everyone. It will happen to you. However, if you can identify that early on in your career and fix that, you can make a lot of money quickly. The next one is ego scaling. Now, I've just spoken about this where you have sized up. It was 2020 and I had a $15,000 trading week, or $13,000. After this week, I came to the charts Monday. I took 6 trades with $3,000 risk each. And what happened that Monday? I lost $21,000 because I had spreads and commissions as well. I lost my whole account. So that previous week, I made so much money that I thought I'm going to up my size. I did that, and I ended up losing everything. And the third is FOMO entries. So for example, right, I've just identified some really nice entries on this gold chart here. See, now that it's actually gone and hit its full target, you can see, I think price was around here last time we spoke. Now it's gone to hit that full target. So you didn't catch this first one, but you're waiting for this to happen. And it doesn't. Price instead shoots up to take the liquidity out, which again, we were targeting that, you can see. But what happens if you were just like, oh shit, well look at this big move up. I'm just gonna enter this. and you enter right here. Now you enter a trade based on complete FOMO with no strategy. And what happens in these scenarios is because price has already hit a level of liquidity and you've FOMO'd in, it's going to come down, take you out, and then go up. I would never recommend this to anyone. This is a quick way to blow all your accounts. And the next one is cutting winners early. So if we jump back into this chart here, this entry model I showed you here, because we know where price wants to go. If we know that, we can identify that. All right, we're going into a bit of drawdown, no problem. Stop loss is protected. It's a good trade. If price comes into this level and you see it reacting and maybe showing some form of rejection, you might close that trade early. So now you close it here because you're scared. You catch a 0.63 risk to reward ratio trade instead of letting it play out for the full target of 1.8 risk to reward. What you should do instead is just move your stop loss to break even. Move it to here. So now you can't lose any money on that trade. And the one trade away syndrome is something that's going to ruin your trading completely. Maybe just one more trade. Maybe just one more trade. You need to have a rule set in place. And I had this rule for a long time, which is one trade a day. One trade a day in one session. So if I've traded London session, I can only take one trade on gold. I sit on my hands. If I take a trade, it's a loss. Cool. This is going to avoid every one of these other mistakes because you have one shot. It'll make you a lot more profitable quicker. So we just went through the top 5 psychological breaks every trader hits. Now we're going to go on the top 5 things that matter when you're looking at a chart. And the first thing is market structure, or higher highs, higher lows. This, you can see we have a nice retracement, and then once again creating a lower high. Doesn't break the previous high of the trading range, and then breaks structure again to the downside, breaks the lowest low before making this huge push down. We can see once again we have a lower high and a lower low, breaking structure. Where does the liquidity sit? Now in this example, above highs. When price has done several breaks to the downside, I'll just draw this on, several breaks to the downside like this, at some point we're expecting that shift to reverse, that trend to reverse. And that's why we would look for these trades that I've just showed you before, because that's the reversal of the trend. That's taking out all the liquidity that sits above here. And the next thing is support and resistance zone. This is how people assume support and resistance to be. Price taps into a resistance level where price has been before, comes back down. Now it's hit a support level. They're expecting price to just do this. That's really not how the markets work. So that's the trade that we want to catch. This is a very good example of a resistance level and a support level, really. The next one is liquidity sweep. What price has done right here is a liquidity sweep. And you can see that it's no secret price has gone to take that out. So what does people do? They enter trades based on this, looking for price to continue higher. A lot of the time what happens is price will take out the level, pull back, and then reverse and maybe take out all this liquidity to the downside. That's a liquidity sweep. So unless you're trading like a business, you have no hope. What works today might not work in 2 years' time. The markets will never look the same as they do today. Now, everything I've just walked you through took me 9 years to perfect. And most people have spent years trying to become a profitable day trader. And the gap between becoming profitable is enormous. And that's why I've built exactly what I've built here today. It's called AscendAura.ai. And how this works, coded 9 years of trading experience into AI agents that take trades based on my strategy for me. So I'm able to do nothing, zero. Anyone to do is get into the trading industry without even placing a trade themselves. You just upload your trading account, put some funds in there, and I'll connect my AI to your trading account, and it's going to trade like me. It's going to think like me. It's going to act like me without ever having any of these things we spoke about, those 5 psychological traits. AI doesn't have that. Giving you the freedom, giving you the time. You don't have to join a signal group and copy trades on your phone. Oh, you missed it. Oh, you were too late. Nah, this is going to do it all for you. Basically, yeah, you can see the results here. So a $5,000 account ended with $36,000 in 1 year. The Sharpe ratio is very good. 5 is considered like extremely good. This is at a 4. Max drawdown is 13%, so of course you're going to have some losses. 57% win rate and 1,555 trades executed over the year. I'm only giving people access to the AI that have watched something of mine, and you guys have just watched this video. So you see this QR code on the screen here. Make sure you use that right now. You can get access straight away to this AI. It's only going to be for a few people, so get in quick. I'll open it up to 10 spots for those that watch this video. So with this link, you can open your account up immediately and start trading tomorrow. Again, all completely hands-free and automated. Guys, thanks so much for watching. If you found this valuable, consider subscribing. It's free. You can change your mind whenever, but I'll see you on the next one.